Thanks for spending some time with us here at Retiring Well during our 10th year of being on the show. This week, we're going to talk about the different sources of retirement income that may be tax-free. Wouldn't that be nice? Now we're going to talk about the HIT list, H-I-T, and how that should be incorporated into your financial plan. What are the dangers of day trading? You hear a lot about that on the news now, the buying and selling, or the folks sitting at home doing that. What are those dangers? And finally, planned giving. Boy, it sure is nice to help others and give back to the community. What are some planned ways you can do that in your retirement? Stay tuned. All those and more coming up today on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Let's talk about different sources of tax-free retirement income. But before we dive into that, let's give you a visual of, imagine yourself and your spouse, you're retired and enjoying a comfortable day on the beach, just relaxing and taking in the sunshine. And then here comes this strange fellow that just sits down right next to you, and he's got this white beard, and I'm not talking about Santa Claus. Instead, it's Uncle Sam. And Uncle Sam is a part of your overall retirement plan. So you have to be aware of what impact taxes are going to have on your plan. So one of those sources of tax-free retirement income comes down to Roth IRAs, and that can be handled either through contributions during your working years or Roth conversions during your retirement years. So it's not something that you're completely ruled out of. So if you have different traditional types of IRAs where every dollar you pull out is going to be taxable to you, there's the option to consider shifting that money from a taxable IRA over to a tax-free Roth IRA, and some of the benefits of the tax-free growth and tax-free distributions that that you might enjoy. So that's one area. Another is Roth 401k or 403b. So while you're working, you might have the ability in your employer's plan to be contributing after-tax dollars into a plan where then it grows, again, tax-free, and then upon retirement, that could be tax-free income for you. Another source might be municipal bonds, but with municipal bonds, there's different interest rate and default risks that you need to be aware of, and whether or not they would fit specifically into your overall investment needs and investment plan. Health savings accounts are one that you get a tax deduction to contribute, tax-free growth, and then if taken properly, the withdrawals are tax-free. So you may be looking into a specific plan for your health insurance where health savings accounts would apply. The last one I want to bring up is cash value life insurance. This is one where it's a specific type of life insurance and how your premium payments are structured going into the life insurance plan, where maybe at a future point in time, like in retirement, where you can borrow the cash value from that policy and not pay any taxes on that. So again, has to be structured properly, and you're dealing with different insurance companies in that example. So again, take a look at Roth IRA, Roth 401k, different types of municipal bonds, health savings accounts, maybe cash value life insurance. They're all different options that you may want to consider for a tax-free retirement income.
Awesome. Lots of great information there from John about the tax-free retirement income options that you guys have. You know, what brings to mind is just really Roth accounts. So I had a couple come in just recently. They retired at age 63, and they didn't have health insurance through their employer after they retired, and so they had to go on marketplace insurance. And typically, you know, with Roth accounts, they're the last funds that we want to touch because they grow tax-free for the rest of your life. Well, in their situation, because they had to go on marketplace insurance, and that insurance is income-based, it made the most sense for us to take some income from their Roth accounts, so it wasn't shown as taxable income, so they qualified for a higher health insurance subsidy. So these are all little things that we're looking at to make sure that you're getting the most bang for your buck by qualifying for those different subsidies while also not paying more in taxes, right?
Yeah, you know, I think it's been understood that, hey, let's wait until retirement to think about our tax situation. And I would like to push back on that. Every single year, I think you should know your bracket. You should know which tax bracket you're in and what your tax options are, because you're playing the long game here. And so you don't want to miss an opportunity. I had a client come in and we went through a whole analysis just from a tax perspective, and we realized, hey, listen, you could contribute to your HSA. That's going to be an above the line deduction. That's going to help you. After you do that, let's look at how much you might be able to maximize in your Roth 401k. He's still working, and he says, well, I know where I'm at in the bracket. It makes sense for me to contribute to my Roth 401k, and that's a relatively new option, which is definitely super powerful in that long-term tax-free goal play that you're trying to make. The last one that we helped work out with him was what sources, like in retirement for tax-free income, might we have? So we put into play a life insurance policy that's going to build up the cash value so that when he gets to that age in retirement and he wants his tax-free income, potentially have a good source of bringing money out from it. So if you have any questions on where you're at in your tax planning, give us a call. We don't want you to miss any opportunity. Coming up next, we're going to be hitting the hit list. Want to know about that? And also the dangers of day trading. Stay tuned.
NMC Extended Education is introducing an educational class titled Retirement Secrets, Your Best is Yet to Come, presented by Centennial Wealth Advisory. If you are nearing retirement or already retired, then this class is for you. Many things can threaten your ability to outlive your assets and retire well. The big three being healthcare, inflation, and taxes. Learn to navigate the critical issues that a retiree must deal with. You'll learn how to plan for a predictable and sustainable income, minimize taxes on your IRAs, maximize your Social Security benefits, and avoid estate planning mistakes. We'll also discuss long-term care concerns and what investments are appropriate in different situations. The cost is only $69. Materials will be provided, and a spouse or guest may attend for free. The class will be held on Wednesday, November 10th and November 17th from 6 to 9 p.m. at the NMC Great Lakes campus. Reserve your seats today by calling NMC at 231-995-1700.
Hi, my name is Jack Klunder, and I am a financial advisor with Centennial Wealth Advisory. I work out of our Cadillac office, and we specialize in retirement planning. We take a very holistic approach. We start with investments and see how you're situated there. We do wealth management. We do income planning. We do tax planning, any kind of healthcare issues or needs that you might have for insurance. And then we talk about what your legacy plan might be. So if you are nearing or in retirement and you have questions that you want to go over, please give the number on the screen a call, and we can have and set up a free, no obligation consultation.
I want to talk to you about the HIT list. And it sounds a little bit goofy, but HIT, H-I-T, a little acronym for three things that are going to wreak havoc potentially in your retirement: healthcare, inflation, and taxes. None of very fun topics, right? First, let's talk about healthcare. For some retirees out there, healthcare can be the single biggest expense in your retirement. When do we usually need our healthcare? As we age. So what is your plan? How are you going to be covered for that with insurance? What is your pre-65, as I call it, plan before Medicare? And then what are you doing with all the Medicare options afterward to better protect yourselves? And then what things can you have in place to kind of be a supplement to that? Maybe it's an HSA account, maybe it's additional savings, but what is your general healthcare plan? Next is the I, inflation. Something we don't like to think about. We're hearing more and more about it all the time, but basically what is inflation? The loss of purchasing power, simply. My dollar that I have in my pocket can't buy as much as it used to, basically. So how is that affecting you? What are you doing long term and even now to make sure as you age and as you retire, you have continued purchasing power and extra savings? As retirees, you have limited options, especially in today's low interest rate environment. So what can you do in that? Finally, taxes. We talk a lot about taxes on the show, right? Almost every week we're talking something about that. But as a retiree, it's vital that we talk about that. What is your IRA exit strategy? How are you going to buy out that partner of Uncle Sam now and over time? What are your tax risks, I call that? What if all of a sudden tax brackets today change? What if they go up? Let's just say 10%. Well, what just happened? Pre-tax accounts, basically Uncle Sam just bought 10% of your IRA, right? So those are risk to you. Any holistic plan that's built out there needs to address these three issues and more. And also, that needs to be reviewed continuously, right? So if you retired 20 years ago, the world's different today, right? There's things that happen that we need to be able to plan and be able to be adjustment as they come and on the fly, right? Just like real life. So your retirement plan needs to address this. If you don't have a plan or you feel like your retirement plan does not address this, please give us a call. We'd love to walk through with you and make sure your hit list isn't going to wreak havoc in your retirement.
Will your money last as long as you do? Check out our free instant download on cen-wealth.com on the key financial challenges that can make or break your income plan in retirement. To receive this instant download, simply visit cen-wealth.com, scroll down, and click Download Now to receive your copy of Will Your Money Last as Long as You Do? Simply visit cen-wealth.com. NMC Extended Education is introducing an educational class titled Retirement Secrets, Your Best Is Yet to Come, presented by Centennial Wealth Advisory. If you are nearing retirement or already retired, then this class is for you. Many things can threaten your ability to outlive your assets and retire well. The big three being healthcare, inflation, and taxes. Learn to navigate the critical issues that a retiree must deal with. You'll learn how to plan for a predictable and sustainable income, minimize taxes on your IRAs, maximize your Social Security benefits, and avoid estate planning mistakes. We'll also discuss long-term care concerns and what investments are appropriate in different situations. The cost is only $69. Materials will be provided, and a spouse or guest may attend for free. The class will be held on Wednesday, November 10th and November 17th from 6 to 9 p.m. at the NMC Great Lakes campus. Reserve your seats today by calling NMC at 231-995-1700.
If you are retired or soon to be retired, let us help you plan to retire well. Centennial Wealth Advisory specializes in retirement planning and has offices in Traverse City, Cadillac, Petoskey, and Gaylord. We'll never pressure anyone to become a client. Our goal is to inform and educate. Simply attend one of our live events or schedule a meeting at one of our Northern Michigan office locations for a free, no obligation retirement review.
Hi, in this segment, I want to talk to you about the dangers of day trading. Now, the reason I want to talk about this is, with the pandemic, we had that stimulus money a lot of people got, and all of a sudden there was just a sharp spike in day trading. You've got these apps like Robinhood that are very easy to use. There's no fees for trading, and especially a lot of millennials were finding it, we're now gambling or trading stocks, and something they had never done before. So I just wanted to talk about this because there's been a sharp rise on day trading, and there's some dangers or some risks associated with it that I think is important for people to understand. First of all, you got to understand that when you're day trading, all your trades are short term. You're buying and selling most typically within a year. Because those trades are happening within a year, your gains over your losses are going to be subject to ordinary income tax rates. You don't get the favorable long-term capital gain rates, because again, they're less than a year. The other thing you got to keep in mind when you're day trading is you got to keep track of all those trades. At the end of the year, when you file your tax return, you've got to show the buys and sells, and if you've been doing a lot of trades all year long, that could be a lot of record keeping. I'm going to put a study up on the screen for you because it shows that only 3% of the people that do day trading actually are making money, and less than 1% are even making more than minimum wage. So, you hear a lot of people when they're trading, they're always going to tell you about the stocks that do really well, right? But they don't tell you about their losers. You got to understand when you're working with mutual funds or you're working with third-party managers, they're managing billions of dollars. They have millions they can spend on research that's not available to us when we're just trading stocks on a daily basis. We don't typically have enough information behind a stock to understand, where it's going. We're speculating, right? Now, we might speculate right, and that's a good thing, but we might speculate wrong, and that's a bad thing, right? We're going to lose. Find that when people have a period of time when they're, the market is cooperating with them and they're doing day trading, it can kind of get addicting because if they keep having some winners, they kind of, it's kind of like gambling. They don't know when to stop until there's a time when the market doesn't cooperate. So, I hope you found this valuable. Again, there's been a sharp spike. That company Robinhood that out there, that millennials are using, they went from 10 million users at the end of '99 and through the pandemic now 13 million. Put that in perspective, Schwab 12.7 million. So understanding the dangers is very important. If that's you out there and you maybe want to see how you can have some professional management, then certainly give us a call.
Just more great information there on that hit list, and then the dangers of day trading. And when I hear hit list, it kind of brings me back to my days playing hockey. I remember when I started Pee Wee and we started checking, I got a little nervous about hitting people because I'm a smaller guy, and a lot of those guys were a lot taller than me. And I remember going up to one tournament up north, and my grandfather was with me, and when we walked into the rink, I saw this guy, and he was over 6 foot, and we were young at that point, maybe 12, 13 years old, and I think he could tell that I was a little nervous about what was going to happen in this game. And he said to me, you know what, you go and knock that guy down and hit him, I'll buy you an ice cream cone after the game. And looking back on that, it didn't really hit me at that point, but what my grandfather was doing was kind of just helping me plan for those big situations, for those things where they might hurt, but if you plan for them, you're ready for it, and you can tackle those situations. And that's similar to the hit list, okay? Healthcare, inflation, taxes, those are all huge things that can impact your retirement, and we have to plan for those. So if you do that, you should be in good shape.
Absolutely. I definitely appreciate your hockey story. My kids are also playing hockey, and I'll hear them come to me and say, Dad, I'm scared. And what I constantly tell them is, it's okay to be scared. What are you doing about it? And I think the same thing happens potentially to you. What happens when you don't know something from your hit list? I think people naturally feel scared. My question is, what are you doing about it? And so it's okay to be scared, but to get educated, to help us teach you about the different strategies that you can put into place right now, it takes that big, scary future event and it really kind of brings it down to size and levels the playing field. You know, the other thing that they talked about was the dangers of day trading. And I've been accused once or twice about taking a lot of risk when it comes to water skiing or snow skiing. People have said that might be a little bit crazy on those arenas. But to me, it was always a calculated risk that I took. And so when you look at the statistics and you look at all the risk of day trading, you wonder, you know, that 3% that might make money, what does that mean for the rest of the people? And so you want to be aware of your risk. I think taking calculated risk, but ultimately the best thing that you could do is get a great financial education. And so if you are all would love to sit down and help us continue to teach you about your continued plan, please give us a call. Stay tuned for planned giving coming up next in a great segment.
Your grandchildren are precious to you. They are your life. This is your time to have that special relationship. Taking care of yourself is taking care of them. Centennial Wealth Advisory is offering a free, no-obligation retirement review to make sure you don't run out of money during your retirement. Centennial Wealth Advisory. Your best is yet to come.
NMC Extended Education is introducing an educational class titled Retirement Secrets, Your Best is Yet to Come, presented by Centennial Wealth Advisory. If you are nearing retirement or already retired, then this class is for you. Many things can threaten your ability to outlive your assets and retire well. The big three being healthcare, inflation, and taxes. Learn to navigate the critical issues that a retiree must deal with. You'll learn how to plan for a predictable and sustainable income, minimize taxes on your IRAs, maximize your Social Security benefits, and avoid estate planning mistakes. We'll also discuss long-term care concerns and what investments are appropriate in different situations. The cost is only $69. Materials will be provided, and a spouse or guest may attend for free. The class will be held on Wednesday, November 10th and November 17th from 6 to 9 p.m. at the NMC Great Lakes campus. Reserve your seats today by calling NMC at 231-995-1700.
Are you nearing retirement or in retirement? Have you had your portfolio just looked at or have a second opinion on that portfolio recently? Centennial Wealth is a full service advisory firm and we have multiple locations in Northern Michigan. I'm in the Gaylord office primarily. The office is right downtown Gaylord. Also up in the Petoskey office as well. That office is right off of 31. I'd love to hear your story. I'd love to sit down and chat, and it's a free, no obligation consultation, so just call the number on the screen.
Hi, listen, in this segment, I want to talk to you about what we call planned giving. Okay, here's some strategies that you may or may not know of. First of all, there's what they call charitable remainder trusts. Okay, this is where you make an irrevocable transfer to a trust. Okay, and then that trust provides income to that beneficiary. And then at the end of the term, the money just goes to the charity. Now the plus in this is that you get a partial, tax deduction because you're giving to the charity, but they got to back out actuarially the income that you're going to receive. So there's a plus here, but the con is it's irrevocable, meaning once you put it in that trust and it's formed, you can't undo it. Another strategy is what they call charitable gift annuities. Okay, this is where you make a gift to the charity. Okay, the charity provides an income stream back to you for your life. Okay, and then when you die, the charity just keeps the balance. Okay, so very, very unique strategy. There's then what they call remainder interest deeds. Okay, this is where you can gift property, okay, to the charity. Now they own it now, but then what you do is you retain a life estate, which means that you can basically live in that property for the rest of your life. When you pass away, it's already in the charity's name. They keep the property. This one is really neat. It's what they call donor advised funds. Okay, this is where you can take money, put it into the fund. Okay, you get a tax deduction for whatever when you put it in. The money within that fund grows tax-free. I mean, you don't have to pay tax on the growth. And then you get to pick the charities that you want the funds to go to. Very neat, and it can be multiple charities. So this is a very neat strategy. One that people miss all the time is what's called gifting appreciated stock or bonds to a charity. Think about it. Let's say you purchase the stock, you know, your number of shares, it was $5,000. It's now grown to $10,000. If you sell all that stock, you've got a $5,000 capital gain, right? Well, what they'll allow you to do is take that $10,000 of stock, gift it directly to the charity. You get the deduction for the $10,000, but you don't have to pay tax on the capital gains. Listen, if you're somebody that's already giving to a charity and you're holding a portfolio of appreciated stock, this is absolutely one way you want to give. All right, and most charities, you'd be surprised, can receive stock and bonds that way. Folks, we make a living by what we get. We make a life by what we give. Winston Churchill. Listen, if we can help you in this kind of planning, I encourage you, give us a call.
Hey, I hope you found that really valuable about what are your options when it comes to planned giving. As I was listening to that section there, I went right back to my college years. I had a mentor that gave me a book from Jeffrey Marks called The Seasons of Life. And in that book, it talks about the journey that a young man took through football and the different levels of football that he got to experience, from little pee-wee football all the way up to professional football to high school coaching. And as he was talking about mentorship and, you know, a possible key to a happy, successful life, he had a line in the book that I have never forgotten. It simply said, "Find a mission other than yourself." And those words just were seared into my brain. And I think it just made a lot of sense. If I look at all people that are content and happy, a lot of times their mission is other than themselves. And so I hope you found some of that information helpful about what your options. It's something that we love to be able to help with. We're going to plan to give. You know, sometimes I find people have the money before they found the mission. Well, we have options that they can actually give in this tax year. They can get the deduction potentially for their goal. And they can also just let that sit in a fund to wait until you have found your mission to give those funds to.
Yeah, you know, what I found, Jack, is a lot of times that with our older clients, they have those required minimum distributions that they have to take. And sometimes those people, they don't really need that money, right? So in that scenario, they've really come to find that qualified charitable distributions make the most sense for them. They can take that RMD that they really don't need for income and donate that to a church or a charity of their choice. And it gives them that comfort that, hey, their money is going to work and being donated to somewhere special for them. So if you found any of this information beneficial to you and you have questions, please don't hesitate to give us a call on the screen. We'd be happy to meet with you. And don't forget, stay tuned. Well, don't stay tuned, but come back next week because we're going to be on the same time and same station. Take care.